Year, Malaysian authorities launched another search for the airliner MH370, and in the last week, paused it again. We speak to a woman whose husband was on board. Good evening. This is Newsnight, brought to you live every weeknight from Broadcasting House in London and broadcast around the world with the best insights and interviews. Tonight, our panel is the economics editor of The Times, Mehreen Khan, Edward Fishman, who was an advisor to a former US Secretary of State, and advertising tycoon Martin Sorrell. 90 minutes ago, the US stock markets closed. They were down a lot, down as much as they were on the news of the first COVID lockdowns in March 2020. Since Donald Trump announced his tariffs policy and other countries started responding with tariffs of their own, analysts reckon the amount wiped off global stock markets is around £4 trillion. To put that into perspective, that is the equivalent of the total output of the UK economy for a year and a half gone in just 2 days. Now, Mehreen, I'm sure you've been looking at your Bloomberg terminal and other financial news services today. Just give us some numbers or tell us a story about what you think has actually happened today.
Sure. So on Thursday, we were saying this is the worst day for the stock market since 2020. That's basically been extended. It's been worsened by news of China's tariffs. It's been worsened by the noises coming out of the Trump administration, who seem as defiant as ever. And I think I was here a couple of weeks ago and I said that there's a fundamental reassessment from the stock market about its relationship with the president and the president's relationship with the stock market. I think a lot of us naively assume that the only guardrail on this president would be the stock market because he cares about it and Americans' wealth is attached to it, and the valuations of American companies are important to him. Apparently, they're not as important as his ideologically driven idea that he wants to rewire the US economy from what it is right now, which is a highly advanced, slightly smaller manufacturing base, but it does a lot of good things well, including services. They don't want to do that. They want to do everything. It sounds like a plan for autarky, and if you're going to put an economy through that much pain, the first thing where that pain is going to be felt is in the stock market, where the valuations were eye-watering as of January and February, and what we're just seeing is a complete reversal of the buoyancy of what was a Trump trade, which now seems a very long time ago.
Worried about the American worker now.
He seems to be worried about the American worker.
The dispossessed.
I wouldn't say, potentially raising inflation for American consumers.
But it was interesting in the Rose Garden, who was on the lawn?
UAW,
auto workers and people in construction jackets.
Yeah.
So different. He's representing a different. I think he looks at his base, and he thinks that's more his base.
I think there's lots of scope for us to discuss all of this later on in the programme, but I just want to get a sense of the scale and the mood amongst the people that you talked to. I mean, you were on a big conference call with loads of titans of industry, weren't you?
Well, yeah, so a lot of American CEOs.
How was that?
A tremendous amount of uncertainty. I mean, bewilderment, confusion, and I think for the next 2 or 3 months we'll see a continuation of that. And then I think when the rubber hits the road, I think growth will slow. I think there'll be more inflation, and interest rates will be higher than we would have anticipated. And in that environment, people will start to cut back, lower cost, and efficiency, faster, better, cheaper in the advertising world, I think will become more and more important. So AI, and interestingly, AI and AI implementation and technological implementation will accelerate.
Okay.
I think that will be what will happen in 3 or 6 months'
So there might be a bit of an innovation silver lining.
Yes, because, and ironically, I mean, it will replace labor. So, I mean,
the opposite of what Trump wants to do.
Yeah.
Just in terms of that, and I don't want to get all kind of like soap operatic and gossipy, but those CEOs are presumably like tough guys. Did they seem really rattled?
And
women, yeah.
Yes.
I mean, tough guys
Not as many
generically.
women, but...
did they seem rattled in a way that...
Well, they're very uncertain. And there's also, and this is what people don't talk about, there's fear. There's fear of speaking out. And I was at a conference a few weeks ago in Washington, before the tariffs obviously kicked in, and 85% of the audience strongly disagreed with the tariff policy or the proposed tariff policy, but only 50% would say it was time to speak out. So there is a fear of retribution.
Right. Edward, lots of scope for us to talk about what's going on, but just very quickly, your new book is about economic warfare. Is this a kind of war that we're in now?
I think it is. And I think one thing that's a misnomer right now is people are talking about a trade war and that this is just going to be tit for tat, tariff retaliation. That's not really what's at stake here. We are looking at a potential multi-domain economic war. Look how China's responding. They've got a 34% tariff that's going into effect, but they're also responding by sanctioning American companies. You know, they added the biggest U.S. drone company to their sanctions list. That company will no longer have access to batteries from China. You know, they have put on export controls on critical minerals to the United States as well. And so I think that's the thing that Trump, by the way, misses, because he thinks that just because the U.S. runs this giant trade deficit with everyone else, we can always impose more tariffs on them than they can impose on us. But what he doesn't take into account is that countries can also respond with things like sanctions, export controls, and even anti-monopoly investigations into American companies.
And I think the Chinese will alter their trade patterns as well.
Right,
They're
exactly.
going to go for the BRICS, the next 11, the global south, and they'll seek to divide Europe as well. It'll be very interesting.
Going to be one of our subjects in a few minutes' time. But before these guys came into the studio, I spoke to the US businessman Hal Lambert. He's the CEO of Pont Bridge Capital. He's a big supporter of Donald Trump. In fact, he helped to organize his first inauguration. And I asked him if all the turmoil we've seen on the markets today is all part of the plan.
I think you're going to see a lot of things happen over the next, let's call it 60 days, as countries reach out to President Trump and try to negotiate some changes to the tariffs. You saw the Saudis and OPEC decided to increase production. So I think you're going to see energy prices drop globally. So I predict that actually prices begin to come down globally, which will enable the Fed to cut interest rates. And I think ultimately you're going to look out, a year from now, and this is just going to be a blip.
A $5 trillion blip.
Well, in the context of, $100 trillion global economy.
What makes you so confident that interest rates are going to come down in the US? Because Jay Powell, the chair of the Federal Reserve, the man who decides what interest rates are, did a speech today where he said these tariffs are bigger than he expected, so therefore inflation might be higher than you would expect and economic growth might be lower. And that doesn't seem like a recipe for then interest rates to be lower.
Well, Jay Powell's been wrong quite a bit. We'll see what he does, but the reason I'm pretty confident that inflation is going to come down and not go up is a couple of things. One, energy prices are going to drop. The other thing is that Biden administration put literally over $1 trillion of new regulations into the U.S. economy just in 2024. Those are not going to go into effect. Those are going to be pulled out. Those costs are going to come out of the economy. And that's why I predict that inflation actually comes down.
You talked about how you think this could all bottom out in about 60 days' time. If in 2 months' time, actually, things are still looking like they're looking today, and there's chaos, and people are losing a ton of money, would you think it's a point to maybe revisit the strategy?
Obviously, you're not going to have, 4 and 5% drops in the market every day from now till 60 days from now. We go to zero pretty quickly. So, Trump is focused right now on Main Street and not on Wall Street. And, Wall Street's going to be okay.
But is this a gamble by President Trump, or is it guaranteed to succeed? Because if you're talking about 3 to 5 year timelines there, this needs to be a strategy that could work rather than taking a chance.
I wouldn't call it a gamble. He's not doing this lightly. He certainly watches the stock market because he's talked about it. I think it's actually a bold move. He's willing to take this short-term pain that's happening, certainly with people's 401ks and IRAs, there's pain there. And he's willing to do that for the longer term benefit.
Do you think there's a danger he was maybe a bit dishonest during the election campaign? Because he talked about the first half, about making everyone richer. He didn't talk so much about the pain bit.
Well, no, I don't think he was dishonest. Look, he's talked about tariffs for 30 years. What I'm more surprised about is it looks like the stock market didn't believe him. Because the movement in the last 2 days, I mean, he has telegraphed this pretty heavily, that this was coming, and yet you would have thought that no one realized he was serious, that this was just...
He didn't telegraph the scale, though, did he?
He didn't telegraph that, and I think the other thing that was maybe a little surprising was kind of the global 10%, like you said.
And just quickly before we go, is the real deal here actually to get the value of the dollar down, which then ultimately could help America pay its colossal government debts?
I think there is a goal of getting lower interest rates. We've got, $35 trillion debt. So, every move down in interest rates saves a lot of money from a debt servicing standpoint. So getting interest rates lower is certainly a factor that needs to happen. And again, I think that ultimately happens with lower inflation. Look, just one quick example. I have a friend of mine that has a small aerospace parts business. They were literally days away from their UK company, by the way, was going to move their manufacturing from this company in the United States to India. And with these tariffs, they just came back to him yesterday and said, never mind, we're going to keep it with you guys.
Well, thanks for your time tonight. I'll let you get back to your trading in bank stocks.
Thank you so much.
Yeah, Hal Lambert, who'd just been buying some discounted bank stocks before we started talking, so he was feeling quite chipper. Edward, I mean, that was interesting there because we talk about this as if it's a rebalancing of trade, but it sounds like to the true believers, it's actually about US interest rates, which is about US government debt.
Right, yeah, I mean, clearly there is a contingent within this new Trump administration that sees the dollar's role as the global reserve currency as not an exorbitant privilege, but actually something that is hindering American export competitiveness. The problem with that, though...
Just unpack that a little bit. So that is a phrase from,
no
French in the 1950s about that if the dollar is the world's currency, that's a great thing to have.
Of course, right? I mean, if
American.
if there's infinite demand for your debt and infinite demand for dollars, we as the United States can run budget deficits year after year after year, and foreign countries can finance them, right? What Charles de Gaulle and what other people have thought is that this is an exorbitant privilege. What some people in Trump's orbit think is that because there's this demand for American assets that's not at all tethered to American trade, what it does is it makes the dollar stronger than it otherwise would be, and therefore, companies who are making widgets in the American Midwest are no longer competitive selling those widgets on foreign markets. The problem is, though, what you do by weakening the dollar is maybe you help a very narrow sector of the American economy that's focused on manufacturing and exporting those manufacturers, but you hurt everyone because all Americans are paid in dollars. And so if your dollar is worth less, you can afford less. You are poorer. You have less purchasing power.
We should also point out the numerous ironies of the dollar policy, which seems to be a very incoherent one. So the argument for why tariffs are okay and won't be inflationary for the US consumer is because every time a US government has imposed tariffs, the dollar has gone up because there's increased volatility in the world. And it doesn't matter if the US is the cause of that volatility, people still seek the haven of the dollar. So the increase of the dollar will soften the inflationary blow for a US consumer. So every time you said to a Trump advocate that there'll be inflation, they'll be like, no, there won't, because the dollar will offset all of that. Now the dollar's falling. It's doing exactly the opposite of what conventionally it's done. And that, I think, is more about the credibility problem of this administration, the bizarre formulas used to derive these tariffs, which seem to be, economically nonsense, whether they're going to be around longer than they should be, whether they won't be negotiated away. And I think this credibility issue will mean that ultimately, if you push this idea that the dollar's a burden, actually all of the benefits that you've accrued from it might disappear. And that actually might end up being the most burdensome thing.
Oh, I wish I'd done a PhD in economics to understand all of this, but I get the gist. Martin, I mean, people will be really annoyed. Liz Truss will be really annoyed if I compare this to the Liz Truss mini budget. But I mean, we had a political system where she was moved on pretty quickly by her own political party. Trump seems quite unassailable. What's the politics in America that could result from all of this?
It's going to be the midterms. The Wisconsin result in the Supreme Court was quite interesting because Musk put a lot of money in there, $20 million or so. Personally, with the cheesehead, the Wisconsin cheesehead.
He did, yeah.
Came the Green Bay cheesehead. So he put a lot of effort in, and they failed there. The two Republican congressional seats they kept. So it's going to be really interesting to see what happens in the midterms. The check to Trump would be in the midterms, and we have to see how that pans out in the middle of next year.
And presumably that means loads of Democrats winning if people...
Well, the House would flip to the Democrats, and that will put a brake on what Trump can do, although he will continue to seek to enforce things through executive orders, and we have to see how that plays out in the courts and in Congress itself. The other thing is, two things have happened which have helped him. One is the fall in the oil price. The Saudis this morning said it was to deal with the Kazakhstani overproduction, and that they were going to produce more. That's one thing. And the second thing is that actually yields have fallen, and interest rate, and there'll be pressure.
Of government debt.
Yes, and there'll be pressure on Jerome Powell to cut. And some banks are saying we'll have 4 or 5 cuts. I don't think there will be as many. We'll have to see how it plays out.
Edward, is the next stage of this drama in America not actually the political reaction from voters or from bits of the Republican Party, but a clash between the chairman of the Federal Reserve, Jay Powell, who sets interest rates, and Donald Trump, who wants interest rates to come down?
In 2026.
Replacement next year in March. Right?
Yeah. So
But in the meantime, there could be a massive fight between the two.
yeah, look, I think that one thing that a lot of people in the United States have been worried about now, even dating back to Trump's first term, is that one sort of totem of American policy that has been held sacred is that the Federal Reserve has independence. They're free to set their own monetary policy based on their dual mandate, right? What Trump has never really taken into account, never believed, is that he actually thinks he should be able to have some sway over the Federal Reserve decisions. So it's possible, I think, even before Powell comes up for his term, that Trump could try to put pressure on Powell, and we don't know how that could manifest, right? I mean, he's used all kinds of unorthodox measures to put pressure on all kinds of people in the United States already in the last couple of months. So I think not anything's off the table.
I think that's also the Liz Truss parallel. So there's a couple of parallels. One is the ideological zeal in which Trump seems to be pursuing tariffs, which is maybe uncharacteristic of him, ideology. Liz Truss had that. The other thing that she had, she went after the independent institutions of the UK. Now, we always thought that a Liz Truss moment can't happen in the US because they've got the reserve currency and everyone's always going to want US assets. But maybe there is a limit. Maybe there is a line. And I think the Fed could be one of those lines.
Just to move on and talk about China, who announced their new tariffs of 34% today to come into effect next week. You've been to China recently.
Yes.
I mean, is that something the
I came
Chinese...
away actually feeling very optimistic about the Chinese economy.
on their behalf?
Because the Chinese government were going to stimulate consumption. And they do have some fiscal flexibility centrally, not at local government level. They do have the real estate problem.
What will they be doing then?
Well, they would be stimulating the economy by pumping more money into the economy, and it's stimulating consumption. So I came away a little bit, but obviously we're now getting into trade war. Very interesting tonight. There was a statement by ByteDance that, Trump has now extended the life of TikTok in the US for another 75 days. Yeah. And ByteDance made an announcement that they're in negotiation, but it will be subject to Chinese law. I was surprised about that. I thought ByteDance would dig in. And they wouldn't surrender the US asset they have in
TikTok. Would
but
be a
it
bargaining
sounds as
chip,
though, yes, it sounds as though there might be room. I mean, the Chinese 34% hike only comes in April 12th, so there's a little bit of time a window to negotiate. But it looks like it's going to be pretty tough. But the Chinese will alter their trade plans, what I call the Huawei route. Remember, Huawei were restricted in the US and UK. Well, what have they done? They've gone into South America, they've gone into Africa, they've gone into Asia, they've gone into the Middle East, and they've gone into Europe and sought to divide Europe. Remember, on EVs, and Chinese EVs, the Spanish and German government actually said no increase in tariff EVs, then Brussels intervened. So that was remarkable. So we may see Europe sort of break a bit in terms of their attitude towards China.
Yeah, Edward, could this whole put pressure on China thing for Trump backfire as loads of countries go, actually, China's a more reliable ally than America, let's cozy up with them?
Oh, certainly. I think that's the big risk here. And, Martin, I'm glad you brought up Huawei, right? Because let's go back 7 years, right? This is when Trump administration officials were coming to this city in London and saying, hey, why are you guys dealing with Huawei? I mean, and it was a big effort to try to build support in Europe and other allied countries to shun Huawei. And then Joe Biden had the policy of friendshoring, where it was deepening our supply chains with Britain, with the European Union, with Vietnam, allies in the Asia Pacific, right? Now Vietnam's got a 46% tariff. Japan's got a 24% tariff, right? So I mean, if you're the government in Vietnam or Japan or anyone in Europe, I mean, how can you be looking at the United States and saying, oh, I'm just going to go with you when you're tariffing me in many cases more than China is?
Vietnamese, the Secretary of the Communist Party, who said they'll negotiate on tariffs now. I mean, they're going to pull the tariffs down to zero, and that will be negotiated next week, was announced tonight.
Even though these tariffs are meant to be non-negotiable on the US side. And can we just talk about the UK for a couple of seconds, despite my sort of ghost of Liz Truss moment there. I'm a bit confused because the Office for Budget Responsibility at the spring statement said if this happens, British economic growth is wiped out and Rachel Reeves' economic plans go down the toilet. But then actually, if you look at like the cost of British government borrowing has gone down today. So that sounds like some good news for Rachel Reeves. Which is it?
I think there is a bit low key, and I'm not sure the government's going to want to celebrate the fact that the gilt yields are overperforming. They're actually becoming much more attractive in this kind of environment. So the headroom issue, which is the perennial issue that we all talk about.
Basically, how much room Rachel Reeves has between her plans and her rules.
Whisper it, but she's got a bit of breathing room. The 10% tariff is obviously not as bad as other trading partners. The Bank of England, which has been scared.
25% on autos and steel.
That's true. There are still sectors of this economy which are going to be super hit by the tariffs. The Bank of England, which has been far too scared to cut interest rates despite a weakening economy because it's worried about its credibility, now has a clear and obvious.
Are we going to take a bet of whether Rachel Reeves lasts or not?
I don't think Rachel Reeves should really be saying or doing very much right now. Just let this play out. I wouldn't be big on retaliation. I would allow the bank to do its job. It's the only real institution that can provide a stimulus to the economy. We can't get it from fiscal policy.
Let's take a bet whether
we'll
she's replaced and increases income tax by £1 billion.
I think she may have got a lifeline because, bizarrely enough, there are a couple of developments that could end up being a bit of a silver lining for the UK.
Well, Martin, you were an optimist for China. Are you an optimist for your homeland, the UK?
I'm afraid not.
Right.
I mean,
Explain
the
why.
exodus of non-doms and the exodus of young people too. I think what the government is missing is that young people coming out of university or in the early stages of their career look at the discounted present value of their earnings and think about 50% to the government and wonder why they're staying here.
They're probably not going to move to America, though.
No, that's true. I mean, they're looking to the east, they're looking to Asia, and they're looking to the Middle East. I think another thing on China, just for a minute. Alibaba is still one or two companies. You remember that President Xi said that was going to break it up into 6 companies. I think what the Chinese have understood the importance of big tech companies, and President Xi's engagement with the tech entrepreneurs is another indication of the way that they are thinking about the importance of big tech companies and making sure that they're supported. But the UK and Europe as a whole, with the exception of Germany, interestingly, because Germany got fiscal flexibility and they're going to spend more on defense.
So maybe, and it also makes me realize that we keep talking about trade and tariffs, but it's actually about all these different things. It's technology, migration, everything. So a lot to watch out for.